Now, government's troubles with raising funds from the domestic market is not ending anytime soon. Both short and long-term government securities that were auctioned last week were undersubscribed by significant margins. My colleague Nanekua Mensah Abrampa takes a look at the outcome of the auctions.
Two major auctions were held last week to enable government borrow some money to finance its deficits, the bonds and the usual treasury bills. For no clear reason, no target was formally stated for the 2-year and the 5-year bonds, but only about 600 million cedis was realized for the 2-year bond and only 575 million cedis was realized for the 5-year bond. Market watchers suspect that targets were not issued because of the consistent undersubscription of government securities in recent times. But realizing just about 1.17 billion for the two bonds is clear indication of low patronage. The patronage of the 2-year and 5-year bonds were still low, although the rates were 21.5% and 22.3% respectively, both above the March inflation of 19.4%. The 5-year bond is a freshly issued bond, but the 2-year was issued to pay for a previous bond that has reached its maturity. Another worrying development is that investors holding onto existing government bonds are adjusting their rates close to the rates for the 2-year and 5-year bonds that were auctioned last week. Are these developments clear messages that investors are shying away from giving loans to government? On the treasury bill side, the story was not different. Government wanted to raise a little over 1.4 billion cedis, but the amount realized was 949 million cedis, a shortfall of almost 460 million cedis.